Today I'm going to talk a little bit about how much you should risk of your account balance as a percentage to get anywhere in the market. So stick around, there's plenty of good information through this video, especially as we get towards the end, and it'll clear a few of the questions that you'll have up, I'm sure. Alright, here we go. Just a bit of thing, I want to talk about something that comes up quite often as a conversation just around currency trading and trading in general. And it's, people will ask the question quite often, how much should you risk on any given trade? I think my opinion's probably changed over the years as I've progressed through. 5 years in the market now, and certainly at the very start when I started trading, you know, the given percentage to risk of your account balance would be 1% on any given trade. Which is fine, I think, in the first year or two while you're learning, because you know you want to have a number of losing trades up your sleeve without really putting a dent in your account so much. But I think on the other side of things, if you've only got a 10 or a 15 or $20,000 account and you're only risking 1% of your account balance, you're probably not going to make very much money either, which is going to get frustrating in time, I would have thought. So I think at the very, very start, like I said, when you're going through that first 1 or 2 years through that teething stage, that frustrating stage, the stage where you'll test your will and work out whether you actually want to be a trader or not full time, 1%, even 2% is fine. I wouldn't have thought you were going to make much money in those first 2 years anyway. I certainly never did. But like I said, like if you risk 1% of your account balance, it doesn't matter what the dollar amount is. But you've got 100 losing trades up your sleeve, which gives you plenty of practice. And at 2% it gives you 50 losing trades to your account's empty sort of thing. Now I've never come across anyone that's taken 50 straight losses, ever. I've asked the question, been in many conversations, been around traders for a long, long time now, and I've never ever heard of 50 straight losses. So I would have thought 1 to 2% in the first little while is fairly safe. So if we fast forward to year maybe 3 or 4 or 5th year even, and you don't have startup capital and you haven't got investors on board, say you've only got 20 or 30 or 40 or $50,000 in an account that you want to trade, say it's your own savings, say you've got $50,000 and you're risking 1%, so that's $500. You know, you're probably going to make a little bit of return by risking $500. I think you know, you could probably get 30 or 40% per year fairly comfortably if you're pretty confident with yourself and you trust your strategy, you don't listen to the outsiders too much. You know, so at 10%, you're talking $5,000. At 20, you're talking, you know, 10. So at 40% return for the year, which would be a pretty good year, I'd be pretty comfortable with 40% in a year. I'd be pretty happy with that. So what's that? That's $20,000 return on $50,000 invested, which is good, but you're still not making a living. You're certainly not paying rent and feeding kids and kids in school and all the bits and pieces, holidays and things like that. You know, so I think once you get the confidence, you could probably run that risk up a little bit, because, you know, up to 5% or something, you certainly don't want to go too much further than that, because at 5%, whatever your account balance is, say it's $50,000, work on the same $50,000, so 5% is going to be $2,500 risk at 5% on any given trade. You know, so if you've got a risk-reward ratio, say you're averaging 5% return to any one unit of risk in the market, so you put $2,500 risk, you're expecting to return 5 times that amount, so that's $12,500. If you can do that sort of once a fortnight or, you know, 1.5 times a month, you know, you're going pretty well. That's starting to get reasonable money. Even once a month, at that $12,500, what are we talking about? $145,000-ish a year. That's an income. If you can consistently go through at that stage, that would be pretty good, I would have thought. But you're risking 5% of a $50,000 account to get those sorts of returns. You know, you can start dropping back in your percentages again once your account balance increases to an amount where you can still put significant dollar risk is at 1%. So you're talking like maybe a $500,000 or $1 million account, which for most budding traders is not realistic. I'm not sure that I've ever come across someone that can just put $500,000 cash savings into a trading account and play with. You know, there's the odd one here and there. But I certainly never started with that amount of money. You know, so like I said, so if we just break it down into these, so you 1 or 2%, it's heaps, because you're not going to make any money anyway. Let's just be realistic. You know, there'll be weeks where you do, and then you'll give it all back in the learning stage. It's just reality. If you're going to go and be a doctor or an electrician or any chosen field on the planet anywhere, you can't just walk up and know it the next week, which for some reason most people think they can do with currency trading, which is total fallacy. I, for the life of me, can't work out why people think that, but you need to do your time before you can really get the results. It's just logical. So my point is my thoughts around how much you should risk as a percentage of your account on any given trade has definitely evolved over the years. And I certainly risk up to 5% on trades quite often these days because I trust my strategy. I've been doing it for a long, long time. And in saying that, I can also handle 3 or 4 straight losses at 5%. I can handle a 20% drawdown in my account, but that's something that I've had to build in myself, a confidence that I've had to build in myself, because often enough I've traded down into those losses, and then you get 1 or 2 or 3 winning trades at 5 or 6 or 7 or 8% risk to reward ratio. It pulls you straight back out of it straight away, but it's having the confidence to do that. So if you're going to go and you're only in the first 1 or 2 years and you were risking 5% and you took 4 straight losses, you're 20% down, you'd be sitting in the corner in the fetal position chewing your fingernails, and you wouldn't be game to put another trade on, which is the wrong thing to do. Like, you want to be able to keep trading and keep learning in those first few years, so I'll just keep those percentages low. There's another reason too that I think in the first 1 or 2 years, which is not ideal, but I think it's a truth. Whether it's a truth or not, it's irrelevant, but I certainly think it's a truth that makes sense when you think about it. When brokers sign beginning traders up, they want that beginning trader to last as long as they can, because if that trader gets on there and they're only there 2 or 3 months and they blow their account out because they're risking too much, there's no chance for the broker to make profit on spreads going forward. So they really want to nurture that trader to stay on that platform for as long as they possibly can, years and forever, hopefully. So the best way for those brokers to keep the new traders on a platform is to promote trading only 1 or 2% risk, because then they last longer, and then the broker continues to get their spreads, which is their income, which is fair enough. You don't have to like it, but it's the way the market works. You just have to understand it. You might as well know who you're in the ring with. And the truth is, I don't think the brokers are doing a bad thing. Those guys are in it to make money. Those guys are taking a heap of risk by setting up brokerages. So you need brokers to be there so we can trade. So you can't hate them for the way they make their money. I think it's fine. But certainly they don't want new traders coming in and blowing out an account in 90 days, because then they're gone and then they have to look for new clients. They like consistent clients that are there for years, and it makes perfect sense as to why. So there's a general rule, the 90-90-90 rule. So they say 90% of new traders lose 90% of their account balance in the first 90 days. And I've seen it lots and lots of times with new traders. They come in and they forget the 1 to 2% while they're learning, and they go and they drop on 10% on a trade, and they take 10 trades and they empty their account and it's gone. And they've done that in 2 or 3 months, and they have to go back and tell their family that they've just blown half their life savings because they thought they were going to get rich quick, and they move on to the next scheme. So I would certainly listen to the advice and stick to that 1 or 2% just in the first 1 or 2 years until you get confidence with yourself and your own strategy, and then ramp it up as you get a bit bigger account balance and as you grow with your skills and you grow with your confidence in yourself. So that's my advice today, guys. I hope you get something out of that. You know, I'm not just saying this. I think it's pretty genuine advice. I'd like to help you guys along. It's been 5 years of fairly frustrating learning. I'm in a position where I'm making pretty comfortable money these days, but the first couple of years was just a nightmare, really. There's a number of times I sat down and worked, and I had to ask myself really whether I wanted to keep going or not. And if you guys are in that steep learning stage at the start, you're going to go through that. Like, it's inevitable. There's not many traders I've talked to that have really come out of the gates and knocked it out of the park inside their first year. In fact, there's none in the first year, and there's been a couple in the second year, but you know, there's always people that have just got raw talent. Everyone else has to work at it. You know, so I'd be sticking to those low percentages just while you're learning. Once you get the confidence in your strategy, step them up a little bit. And then strike a balance. So you can't go and ask, okay, so what's the right percentage of risk in my account to trade with? The answer is you have to work it out for yourself, because you might be asking someone who's got a $100,000 account and you might have a $500,000 account, you know, so you have to risk percentage-wise 5 times less than those to put the same money in the market. It also depends on how much your lifestyle costs, you know. you might need $80,000 a year to live and support your family and do bits and pieces. You might need $400,000 a year to live and support your family. I'm not sure what your commitments are. So you have to, the question is very relevant and it's good to get asked, but you can't ask somebody else the question. You have to sit down and look at yourself and work out what it is that suits you and what it suits your family and what suits your lifestyle situation, and then go from there. But I certainly wouldn't be relying on an income from Forex within the first 2 years. You want to get your learning out of the way and then start asking that question. It's more relevant in the third, fourth and fifth years. Alright guys, I'll leave you with that today. Certainly worth thinking about. I've got heaps of other videos on YouTube. I'm making more as we go. There's plenty of good information there guys, so I'd like you to get on board. So click subscribe. We want to get as many people on board as we can. Visit my website, forexart.com. There's plenty of good information there. A lot of it's free and I'm looking to build a community. Alright guys, I'll talk to you in the next video. Cheers.